This is the 42nd episode of Kanga Trends. Note, the first Kanga Insights. Curious what it's all about? Interested in crypto market analysis too? Let's go. Hey there, welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and an altcoin of your choice. We come together to take a look at the charts from three different perspectives: technical, on-chain, and of course, our outstanding fire charts. Thanks to the condensed analytical knowledge we serve here, you won't find anything like it anywhere else on the internet. We know you appreciate it because our subscriber count is skyrocketing. We're aiming for 50,000 and we can get there with your help. So if you haven't subscribed to this channel yet, make sure to hit that subscribe button. Leave a like, ring the bell, drop a comment, whatever you feel like. And remember, the content in these videos does not constitute investment advice. For investment advice, consult a licensed advisor or simply do your own research. And I'll be encouraging you to do that through a contest, which, as always, I'll talk about at the end of this video. So if you're ready and you've taken that in, grab your coffee and let's dive into the analysis. As usual, we're starting our analysis with Bitcoin, the king of cryptocurrencies. We need to take a look at what's happening on this particular chart, and we can see that compared to last week, Bitcoin attempted to climb to around $98,000, but was rejected at that level. The rejection led to a drop all the way back to the areas where it had previously been consolidating. We mentioned that an extended consolidation here is very likely, because we were dealing with the 9th bullish candle on the TD sequential indicator. This candle typically signals either a consolidation or even a trend reversal. We didn't particularly expect a strong trend reversal because we saw that Bitcoin had broken through the entire resistance zone and there was quite a lot of resistance. And we focused primarily, extensively, and thoroughly on this horizontal and expansive area. This grayish and somewhat box-like structure here, which serves as a crucial support, should at least at this current point in time act as support. Why? Because historically it has already acted as support, and it has also been resistance in the past. Now it can once again take on its role as support. Moreover, within its area are located key moving averages, literally all of them, because at the top, around $91,000, there's the green line, which is the 200-day moving average. Slightly below that, just under approximately $90,000 or so, there's the yellow line, which is the 100-day moving average, and the 50-day moving average, which is currently located at the base, essentially, of our gray box around $87,300. What can we expect from Bitcoin in the near future? In my opinion, there will be a battle to break through the $98,000 level and an attempt to reach 100,000. 100,000 is the first resistance area, which has also been confirmed several times already. We have a line drawn here that's been in place for several episodes now, maybe even a dozen, where this area has been identified and confirmed by price action as resistance. Only after that can we expect the next resistance around $102,500. After that, we have the previous all-time high. As for support levels, we know that 91,000 is key from a technical analysis standpoint, and considering what's happening in the market today, we can assume that higher volatility may appear. Why? Because at exactly 8 p.m. Polish local time, which is when this important material will be published, a very significant decision on interest rates will be announced in the United States, followed by a notably anticipated press conference with Federal Reserve Chairman Jerome Powell. Such situations usually signal volatility in the financial markets. So keep an eye on what's happening in the markets at 8 p.m. I expect that both shorts and longs will be wiped out, and support levels should hold. As for resistance levels, well, who knows? With favorable conditions, they might be broken. In the case of Bitcoin, it's also worth paying attention to the RSI because something very interesting is happening there. We saw that the 50 level on the RSI was broken through and is currently being held above that level. The RSI touched the 70 level around the area where the so-called quote-unquote overbought zone begins. However, the RSI is not entering deeply into that zone. I expect that such an entry will occur, and that it will look more or less like it did here, where at some point a so-called bearish divergence will be established, which will likely signal our local peak. At the moment, I don't see any basis for this local peak to form within the next few days. I rather expect that, if anything, it will happen in the coming weeks. It's also worth noting that a bullish divergence is appearing on the RSI. However, it is slight. I'll mark it here at this point, maybe like this, as well as here like this. But be cautious because declines could cause, if the price of Bitcoin closes below $94,000 in a given trading session, then this divergence will be completely invalidated in this particular context. So what we're currently observing is worth noting for the record, let's say. However, it's not something that can directly result in a price breakout. I've mentioned support and resistance levels several times. However, I realize that many people watching our content are beginners in technical analysis, so if there's something you don't know, don't understand, or would like to learn more about, and I'm not explaining it clearly enough, please check out Kanga University today in the link below. I'm sharing a lesson specifically about support and resistance levels. Are you interested? Be sure to click the link. And now we're moving on to the fire charts for Bitcoin. To start, I'll explain what fire charts actually are. First and foremost, it's a compilation of the largest order books from the biggest cryptocurrency exchanges in the world, in this case for Bitcoin. And here we can see a blue line. This blue line represents the price of Bitcoin over a 7-day period in this case. And we can see some horizontal lines that are lighter and darker. So what exactly are they? The lines that are below our price essentially represent demand lines. These areas can be considered as buying zones, essentially speaking, while those above signify supply lines. The brighter these indicators appear to be, the higher the buying or selling volumes at those levels tend to occur. The legend is located right here. We're talking here, of course, about the exact volumes and the areas in which they are located. And we can currently see that Bitcoin is moving within a certain trading range, above which there are many resistance levels. The first resistances are located around $98,000. 98,000, which we marked on the technical chart as a fairly significant resistance level from which Bitcoin has already bounced twice so far. And then we see further resistance levels around $99, $99.5, and $100,000. If we're looking for support levels, then we have a bit of a problem here because below the current price, there's a dark area, which indicates that there aren't too many buy orders directly distributed in this zone. However, we do know that recently Bitcoin has been largely bought on the market. Nevertheless, the first significant support levels seem to appear around approximately $93,000, followed by another around 92 or so, though a bit weaker, and then another quite strong one around 90,000. So let's look at the technical chart again and see what is at the 93 and 90 level. Well, 93, we can see very clearly that these are the wicks of our extended candles, the ones here during the consolidation phase when Bitcoin was in that range. Each time it dropped, we saw that liquidity was being drawn in here and there was a rebound. So this is where I would expect the first buying movements to occur. Meanwhile, the 90 level, we can see that it lies deeper within our box. And in this case, it's worth turning on our moving averages. And we can see that it aligns quite well with the 100-day moving average, a very important area because the 100-day moving average has historically served as a key rebound point for Bitcoin, acting as support during downtrends and as resistance during uptrends. Yes, it would appear there, and Bitcoin would very often react to that area. And now the CVD on the fire chart, let's check who exactly is buying. And in this case, we can see that whales are interested in Bitcoin. That's our brown line. Let me remind you that whales are those wallets that hold between $1 million and $10 million in their balance, waiting to buy Bitcoin in case of any market turbulence. The green line represents holders with capital ranging from $1,000 to $10,000. They're also active recently, and we can see that this line is slightly curving. It is somewhat consolidating in the longer term, looking at the last 3 days, but currently it's curving slightly upward, so their buying power is increasing, and the purple line is also very prominent. So these are the wallets that hold between $100,000 and $1 million in their balance, essentially the second largest group. Interestingly, the orange line, which represents retail investors, is currently in a downward trend and they are not buying Bitcoin. So what is Kanga Insights all about? Isn't this mysterious? Let me explain. This episode of Crypto Market Analysis that you're currently watching is the 42nd episode of Kanga Trends on the Polish language channel. However, at the same time, this is the very first episode on our English language channel, and in this case, we're using AI technology to translate what I'm saying here and adapt it for a global audience. Kanga is stepping out into the global world, once again, in fact, in order to reach new users, achieve higher volumes, generate greater interest, and above all, to spread knowledge about crypto market analysis. Be sure to check out the Kanga Global channel, most likely with a slight delay, probably a few hours, maybe even a bit longer, but no later than Thursday morning. This exact material in English and processed by AI, which is very important, will be uploaded to that channel. And attention, there will also be a contest on Kanga Global, so I encourage you to take part in it there as well. And just remember one important thing. On Kanga Global, under Kanga Insights, make sure to comment in English. This is very important for the algorithms. I'm counting on your support. I'm counting on subscriptions. I hope you'll drop by Kanga Global to check out Kanga Insights, even if just to see whether you like what we're doing. Be sure to leave a comment there. We're moving on to Ethereum, which is clearly following in Bitcoin's footsteps, and in this case, we can see that Ethereum is rising above the 50 level on the RSI. Just like Bitcoin, Ethereum has managed to secure the 50-day moving average as support. We saw that this was problematic in recent days. Over the past 2 weeks, we've seen a bit of a struggle here, but that struggle is most likely ending in success, as we now have a clear confirmation and an attempt to break upward. However, I still believe that Ethereum is waiting to see what Bitcoin will do. Even though at the time of recording this video, we can see that Ethereum is rising by just under 1% in the current trading session, while Bitcoin is holding steady at the same levels, I still believe that Ethereum is waiting for Bitcoin to make a move. As for the resistance levels, they remain exactly the same as before. 1,950. From a technical point of view, I see the first logical resistance level here because we had a local peak at this point, and there was also a consolidation zone that peaked right around 1,950. The next resistance level, in turn, is the area around 2,100. And it's worth noting here that the 100-day moving average is also heading toward this area, so this resistance will be doubly strong. As for support levels, if Ethereum drops sharply, I expect a decline down to this consolidation zone. We're unlikely to hit the 1,420 level. I don't see any basis for that. This is a critical support level at the moment, but if there are any major drops, then around 1,700. Those are the areas where I would personally see an opportunity to buy, and I would somewhat hope that it would just be a wick being pulled down, not a falling candle, because if it's a candle that closes quite low, then unfortunately Ethereum might continue consolidating in these lower areas. And now a quick glance at the fire chart for Ethereum. Here we can see our trading zone, and clear resistances and supports are starting to appear. Let's start with the resistances. Around the $1,900 level, we have sell volumes of about 3 million, slightly over $3 million in Ethereum, waiting to be dumped onto the market. But the buy volumes are significantly stronger. And in this case, they appear around approximately just under 1,000, more precisely $1,780 or so, with volumes of approximately around $6 million, potentially waiting to buy Ethereum in the event of a potential drop in price to that specific area. And we can see that there is buyer interest here, particularly among retail investors. Retail investors, even though they were relatively inactive in the market in recent days, are now showing signs of activity picking up. The trend is starting to turn and move upward. Meanwhile, interest from the purple wallets, the second largest group, is gradually weakening, and we can see that currently there is indeed likely a certain handover taking place, where Ethereum is moving from these purple wallets to retail investors. In addition, it's worth noting that we are also dealing with whales here, wallets that hold between $1 million and $10 million waiting to purchase Ethereum. And they too have been in a state of stagnation for the past 2 days. Time for an altcoin, and today it's Solana, and there are really a lot of interesting things happening with Solana. First and foremost, we can see that Solana is bouncing off the level of $157. This is a line we marked on our chart quite a long time ago, and we can see that the reaction is indeed taking place. What's more, indeed, this is happening alongside the 9th bullish candle of the TD sequential indicator, which was signaling that the trend might somewhat weaken or even reverse. And we can see that currently Solana is struggling with the 100-day moving average, which it is also trying to break through in this case. As for resistance levels, the primary one is indeed the 100-day moving average around $151, which is the key area here. $157 in this case would be the next one. If a breakout occurs, which in this case could be sharp, it may drive Solana's price up to the level of $180. On the other hand, if there is a pullback, the 50-day moving average should act as support. $134 in this case. Or horizontal support may appear here around the level within the range of 126. I wouldn't really expect those declines. The market sentiment is, in the current market, a little bit more bullish. In my opinion, I expect that despite everything, even in the case of slight turbulence, Solana will break out and move upward. There's also a lot of positive signs on the RSI because just like with Bitcoin and Ethereum, Solana is holding the 50 level, staying above it, and showing a willingness to break upward. So the Solana chart confirms what we've observed on Bitcoin and Ethereum. What we're currently seeing is a consolidation, which is most likely a prelude to increased volatility. And in the case of fire charts on Solana, we can clearly see that a buyer reaction may occur already at the $140 level, which is higher than where the 50-day moving average currently sits, because we're observing volumes here that incidentally have been moved from lower areas that were located here. They have been moved slightly higher. Let's also check the technical chart and see exactly what's at the $140 level. And just like in the case of Bitcoin, we have wicks from previously extended candles here. So this is where demand first appears, and that demand already seems to be quite strong. There are also quite a few resistance levels appearing, all the way up to $150. They are systematically distributed, but be careful because they sometimes resemble so-called rug pulls, only in the opposite direction, meaning upward, where they appear briefly, in this case, placed on our chart. However, they can disappear at any moment, just like they did yesterday. We can observe that the volumes that were located here around the area on the way to $150 were completely pulled out, just like it happened here. Who is currently buying Solana? Well, we can see that retail investors are on fire. Our orange line keeps rising. Just focus on the information next to my cursor so we can see it more clearly. And we can also see the purple line. So in this case, these are wallets holding between $100,000 and $1 million. Well, the red wallets are also showing interest, those holding between $10,000 and $100,000. Overall, the market is looking quite bullish. The only wallets not interested in Solana are those with balances between $1,000 and $10,000. The rest are buying. And if you'd like me to analyze your altcoin, remember, it's a very simple thing. All you need to do is register on Kanga. You'll find the registration link in the description of this video. Check out the cryptocurrencies we have and let me know in the comments which one you'd like to see in the next video. Just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be KNG. And third, it can't be any meme coin. So you know what to do. Let me know in the comments which crypto you'd like to see in the next analysis. So let's check what's happening with ETFs in the United States, and I have to admit it's looking bullish. It's very bullish because we're consistently seeing very high green volume bars, which indicate that the inflows are positive and that buying is ongoing. Of course, there are some small red bars, slight sell-offs, but they are not significant. Let's take a historical look. Situations like this occurred on the way to the current all-time high of just over $108,000. So this is standard short-term profit taking, nothing that should concern us in any way. So let's move on to the on-chain analysis. And today I've prepared as many as 5 metrics for you. We'll start with the amount of stablecoins in circulation. That is, we're checking whether this purchasing power is still flowing into the market. And here we see our orange line, which, as a reminder, represents the indicator line. The gray line represents the price of Bitcoin, while our orange line, which shows the amount of stablecoins in circulation, continues to rise. However, it looks like a local peak was reached exactly 2 days ago, and since then, the number of stablecoins has slightly decreased. However, these decreases are not significant. I don't think we need to be particularly concerned about this in any way. Let's also check how the largest cryptocurrency addresses in the world are behaving, specifically those that hold Bitcoin. In this case, we're looking at addresses with a balance of 1,000 Bitcoins or more, and we can see that in recent weeks, they have been on an upward trajectory and have been buying Bitcoin. Well, we can also see that maybe the last 2 weeks saw some turbulence, but they came out of it and we saw growth again. At most, the last 3 days have seen slight sell-offs. And this is an interesting thing because it aligns with what we see on the ETF chart, where we observe slight sell-off bars. And this is also confirmed by the amount of stable coins in circulation, where we can assume that these wallets, which is, by the way, another confirmation for us, that the wallets holding 1,000 Bitcoins or more are ETF wallets, which are currently slightly liquidating. But as we mentioned, these liquidations are relatively small. Let's also check how the wallets holding 10,000 Bitcoins or more are behaving. And in this case, we can see that there was a dip on April 25th, with the number of these wallets dropping to 91. However, they are currently on a slightly upward trajectory again, with 3 more added up to the present day. 3 It may seem like a relatively small number, but let me remind you that we're talking about wallets that hold at least 10,000 Bitcoins in their balance. So that's quite a lot. Time for SOPR, the indicator we referred to very often when Bitcoin was on a downward trajectory, because it often told us where to look for the local bottom. Well, now it's time for a bit of a refresh and an update. Let's take a look at the 14-day moving average, which we have enabled on the indicator in this case. This is our moving average, the line that shifts from red to green. And here we have level 1, the bolded line here, which essentially indicates the boundary between selling at a profit and selling at a loss. Very often when Bitcoin experienced significant gains, a correction would follow, resulting in the SOPR dropping below 1 into the red zone. This has happened many times in the past, for example, during the previous bull market, where it served as a reset point for the indicator before it broke out upwards again. It also occurred here just a little bit more. Let me just move the chart so that you can clearly see absolutely everything. This also happened on numerous occasions during the period of 2016-2017, when the SOPR was reset several times on the way to the then all-time high of approximately $20,000 in value. Now history is truly repeating itself in the financial markets, and we're seeing exactly the same pattern. In recent weeks, the SOP has reset beautifully. The level of 1 was confirmed as support, and we have a breakout to the upside, a breakout that may continue. However, caution, because looking at it from a broader perspective, we can see that the SOPR is currently in a zone that has previously acted as local resistance. Will it act as resistance again now? Well, I don't think it necessarily has to happen, but we will definitely keep updating this indicator to make sure whether this resistance might actually occur or not. Now, an update on what's happening on cryptocurrency exchanges, specifically the Bitcoin balance across all the exchanges we know. And in this case, we can see that the amount of Bitcoin continues to decrease while we've observed slight increases. Again, this aligns with the local sell-offs we've seen in ETFs, very small ones, and with the declines in the amount of stablecoins. And I expect that this trend, despite the increases we're seeing here, will continue and Bitcoin will keep leaving the exchanges. Time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or Solana. Present your analysis from a technical perspective, on-chain, fire chart, sentiment, fundamentals, whatever you prefer. And remember, you absolutely don't have to agree with me. The author of the most interesting comment posted under this video by Friday at midnight will receive 20 KNG from me. And the winner for the previous video is Marcin Okaj, who analyzed Ethereum, a very nice comment. I kindly ask you now to contact support to claim your prize. That's all for today. I hope you enjoyed it, and if this is your first time here, I hope you'll subscribe. Please also check out Kanga Global to see Kanga Insights and leave your rating for that content in the comments under that video. Remember to do it in English. And I have one more favor to ask of you. Please rate this episode on a scale from 1 to 411, where 1 means poor, bland, and I don't want to see you here again. Unnadad, 411. Fantastic, and I want more of this. And if you do want more and you happen to like the new studio, I invite you to join me next week. Bye.